what is going on with those equity markets. And it all comes back to Treasury yields, which we are watching closely this morning. Yields moved sharply higher yesterday. They continue that upward march here this morning. Look at that 10-year yield moving up by another 6 basis points to 2.62%. And that follows comments from a couple of Fed governors yesterday. Lael Brainerd, who is waiting on confirmation to be Fed vice chair, as well as Mary Daly. Daly said balance sheet reduction could come as early as May. She also commented that inflation is as harmful as not having a job. And her comments really echoed those earlier in the day from Brainerd, who said that the Fed will start to reduce the balance sheet at a rapid pace as soon as our May meeting. So effectively, what we have seen in the past 48 hours is the conversation really shift from how many interest rate increases are we going to have this year to what does balance sheet tightening look like. We're going to hear from the Philadelphia Fed President Patrick Harker. He's due to speak at 9:30 a.m. for a virtual event with the Delaware Chamber of Commerce. So we might hear him also echo some of these comments. And of course, we've got Fed minutes coming later today as well. So we should get some more clarity on that from the last meeting. In the meantime, even though I say the conversation has shifted away from how many interest rate increases, of course, that's still part of what's important here. And markets are pricing in aggressive tightening here this year of 225 basis points. The last time we saw the Fed move rates upward by that much in a year was back in 1994. So the bar that you see on the far right of your screen in terms of what is expected, that goes back to the biggest since 1994. Brian Sozzi, we'll get the minutes this afternoon. We might get some more information and around the discussion about balance sheet tightening. But this much is clear. It has spooked the equity markets over the past couple of days.
It has spooked the markets, Julie. And finally, we have an economist on Wall Street willing to stick their head out there and say, hey, you know what, all these things coming together, inflation, a series of rate hikes might cause a recession. So the first investment bank to be calling a recession on Wall Street, that is Deutsche Bank, and economist Matthew Lazzetti. I have to give him a shout out here for actually just cutting through the clutter out here and saying, yes, this might actually happen. Lazzetti saying, quote, we no longer see the Fed achieving a soft landing. Instead, we anticipate that a more aggressive tightening of monetary policy will push the economy into a recession. Now, Julie goes on to note that it's hard to predict exactly when this will happen, but he is calling out the potential for slower growth in the second half of 2023, and his baseline forecast has negative quarters for growth in the fourth quarter of 2023 and the first quarter of 2024. Again, that first investment bank to be out here calling recession. I would suspect other banks will soon follow suit.
Well, I mean, this is not so revolutionary, right? I mean, we've been hearing a lot of people talk about this potentially happening, and he's not saying it's happening this year. To be clear, fourth quarter 2023 is not now.